This is Duke University.
All right, guys, thank you very much for joining us today. We'll go ahead and get started. Looks like it's about 9:15. So we're here to talk about technology and entrepreneurship. We have an all-star panel and moderator today. So first off, thank you everyone for joining us. So I'm just going to give a brief introduction, actually just tell you who's here, and they're going to go ahead and just talk about themselves for a minute, and we'll get started. We'll try and save at least 10 minutes at the end for a little Q&A, so if you have any questions, you just kind of wait till the end. All right, thank you. So starting off, we have Hank Hemming from Trautman Sanders, Mike Dornberg from Reverb Nation, John Glushik from Inner South Partners, Ed Sheely from ShareFile, and Troy McConnell from Clever On Demand. So thanks a lot, and Hank, you want to go ahead and introduce yourself?
Okay. Hello? Can you guys hear me? Yeah. All right, maybe I don't even need this. Okay. So my name's Hank Hemming. I'm a partner at the law firm of Trautman Sanders. I work out of the Raleigh office and the Richmond office, and I work pretty much exclusively with either venture capital funds or technology entrepreneurs. So I think I'm much less interesting than these guys, so I'm going to roll right into that. I'm going to let each of you guys take your turn and sort of introduce yourself, say a little bit about what you do, and then we'll kind of go into some questions.
I'm not talking unless you turn this in. Is it on? All right. I'm serious.
You're speaking.
Hi, my name is Mike Dornberg. I'm the CEO of Reverb Nation. I think we're going to talk today about sort of entrepreneurship in the Southeast. I've been in the area for a long time. Started my career at Ernst & Young in the entrepreneurial services group. I've started a couple software companies thanks to this guy over at Inner South. Been fortunate to be successful. This company is in the music space. We started in 2006. I think 2006. We're the largest online music services company in the world. We have over 850,000 artists, serving 27 million fans, and hopefully been growing the business, and hopefully we're gonna be one of the big success stories of the next couple of years, so I can retire.
I'm John Glushik. I'm a general partner with Inner South Partners. We've been around for about 25 years, investing out of our 7th fund right now. It's a $275 million fund. We focus on venture investments mainly in the Southeast region, both life science and IT. I've been with the firm for 11 years now. Before that, I was a software and telecom engineer.
Great. My name is Ed Sheely, and I'm the Vice President of Sales for a company here in Raleigh called ShareFile. And I have a slightly unusual take. I did my undergraduate here at Duke, and what got me into entrepreneurial stuff was just having a kind of Holden Caulfield-esque existential crisis when I was in college and wondering what it was all about. And so I've been involved with 5 different startups, a couple software companies, actually tried to build a nonprofit at one point on leadership and ethics and spirituality. And the last 2 companies I've been with, I really admire Mike because I tried to build an internet music company that was a total and utter bust. And so what he's doing with Reverb Nation is amazing. And so that's very cool. And then my last company was up in New York City with a company that's now called Yext. I work with some other Duke grads. We built an online advertising platform for local and small businesses, which has been very successful and was a lot of fun to be a part of. And just moved back to Raleigh in February to work with Jess Lipson at ShareFile. And ShareFile is an exciting company. We're just ranked 104 on the Inc. 500. We have about 12,000 small business customers. We help them to share files electronically that are either too big or too confidential for email. So there's a lot of different spaces where that can be applicable, whether it's in finance or law, architectural, engineering, construction, design work. And we have about 40 people. A couple people in our space you might be familiar with, Box.net and YouSendIt. What's kind of interesting about those guys is they've raised $34 million, I think, and $52 million in VC respectively, and we've raised 0. So we're growing organically here in Raleigh. I'm pretty excited about it.
Good morning. My name's Troy McConnell. I'm an entrepreneur. I've started and sold 3 companies, and I've just recently started a new one. Glutton for punishment.
Great, guys. Well, we have just to look out at the crowd here, I look out here and I see that most of the people out here look like students. So are we mostly people that want to be entrepreneurs in the technology space? Hands? Okay. Do we have any financing sources out there? There they are. See, yes, I'll look over there. Okay. And anything else? Do we have any sort of others out in the audience? Okay, we have one other. Great. You guys probably know this, but right now is a great time to start a startup. And the economy may not be good. Perhaps that's contributing to it. But there's a lot of really interesting things happening all over the place. I think we should just start out by maybe asking the panel if any of you have some opinions as to why this is a great time to do a startup and sort of what's contributing to it, and if maybe some anecdotes about what's working for you right now. We can just jump all.
I think it's always a good time to start a startup. I mean, honestly, I don't know that it's ever a bad time, but there are some things that are special about right now. And there's some things that aren't so good. But one of the best things is the availability for talent. I think there's a tremendous amount of good people out there. And I think that one of the things we've been doing recently is looking for an operational CFO. So I've interviewed a lot of people, but I've never had more qualified candidates that are willing to work for a relatively small amount of money and ever. So I think that's a good thing. One of the biggest challenges, and I'm going to turn it right over to John, is that I think the availability of capital. The valuations are tough, and I think capital is I think the investors are scrutinizing their investments, I think, much more heavily than they ever have before, at least that I've ever been part of.
Yeah, I'd agree with that. So, I mean, I think that I work for a venture firm, so I always think it's a good time to start a company. I'm never going to go to my LPs and say, well, it's a bad time right now. Don't give me any money. But there are I think there are some waves of technology innovation that are starting to gain a lot of steam now, and we're starting to see a lot of entrepreneurs kind of come out of the woodwork, come out of big companies, get rid of their steady job and be willing to, like Mike says, work for nothing and take equity and live the dream, hopefully. But I'll speak specifically to the investment side. It is very, very tough. I mean, it's especially at early stages of a company's growth. Right now, it's very, very hard to find capital, and it's so hard that we actually have trouble syndicating deals that we want to do. So if we find an investment we want to make and we need some larger investors to kind of come into the deal with us, in some cases, it's very hard to even find people to do that with. So there's a number of deals we've done recently just by ourselves because we've liked them and we're thinking we're going to do them regardless. But from an entrepreneur's perspective, it's very tough. Even relatively speaking, over the last 10 years, I would say it's probably harder than ever. And part of that is because the venture industry has shrunk. There's firms that are no longer investing. There's firms that have moved to just doing later stage deals. The firms that are around in general have gotten smaller. So there's just not as much money in the system anymore.
Cool. I got one. So, yeah, thank you. I would agree with that absolutely. And one of the things we're certainly, we actually just hired a VP of Finance, CFO. So sorry if we took a good one off the market, but we went through a lot of people as well.
Off the mark?
That's right. It's a good point. I'll send you his resume.
If you guys are going to wrestle, I'm going to charge admission.
But yeah, so there's a lot of talent available. One of our other strategies is hiring young talent, right? And so for one of the first times in a little while, kids graduating from college are really, really facing a tough time finding jobs. And so giving them an opportunity to get on the ground floor of something that's going in the right direction and they could have a big impact is even more appealing now when they don't have any other options. Also, I think just culturally, one of the things that I'm particularly interested in is I think as a culture, we have a bit of a crisis of meaning. And being able to be a part of something that you think is going to have an impact on the world that can actually give more meaning to your life. It's a little harder now to have the same level of success that maybe your parents did just by doing the same kinds of things they did. And so I think that people are looking for ways that they can have an impact and see how their lives fit into a bigger picture. For example, our company, what we want to do is we want to buck the trend that we see in technology where times are hard and customer service is an expense, and therefore, of course, you want to minimize that to help your bottom line. And what we want to do as a company is raise the bar for service in the field of technology. And I think that's really, really cool. And when I'm talking with people about that, they get really excited about the fact that not only are we going to be like, net neutral and not do evil, for example, we're actually going to do really, really good stuff and have a really positive impact in the technology space. So I think that's kind of an interesting thing that's going on culturally.
Well, I agree. It's always a good time to start a business. What I will say is this. I think recessions are like fires. They burn out all the undergrowth. And so times like this are better for operators. They're better for people who are strong on execution. Strategy is always important, but I think it's times like this where people can survive. Those are the ones who'll be stronger in a couple of years. So I started a company right after the bubble popped in February 2000. Actually, I started in 99, and then the bubble popped, and then it was really hard to raise money. And I can just tell you that focusing on operations, focusing on execution, being resourceful, surviving, those were the traits that helped me raise money a couple of years down the road.
I think there's one more thing. I think that as I listen to everybody's talk, that I think that is really it's a real positive. I think that, and I especially speak specifically around software or sort of IT those types of technologies. It used to be that the cost of entry was really expensive. To build the software you needed took a huge amount of money. To be able to publish it or syndicate it or distribute it, however you want to, whatever your model is, was very expensive. You had to make significant, at the very least, big monthly minimums. To market it required a lot of expense. There's been this huge reduction in the ability, the speed with which you can build software is so fast. The ability to get it out there is so easy and so cheap. And then a lot of the promotion has been democratized through social media. That's makes it cheap. It means that you can bootstrap companies a lot easier than you used to be. You still have to eat though. But it also means that everybody else is doing it too. So a good idea doesn't last very long. So, and that goes to Troy's comment. If you can't execute, honestly, I'll go like this. If you ever, I see all these business plans. I used to see all of them. 1% of your business is the strategy. 99% is the execution. John, do you agree with that? 1, 2, 3%? Half a percent?
Well, I don't really read business plans that much. So.
We know you're a venture capitalist.
I think that's a great point, Mike. That although the capital is unavailable right now, the technology out there helps people bootstrap for a much longer period of time, especially in software. It probably is not as true in sort of clean tech, biotech fields. But even there, people are using agile development methodologies to try to make things happen quicker. So I thought maybe another question, and this might be more suited to the entrepreneurs on the panel, but maybe, John, you might have some things you've been seeing. Maybe to give examples of what things you're using or doing in your companies that are sort of these new technologies. Are you using cloud services to help you scale? Are you using the open source stack? Are you using agile programming methodologies, things like that, or other things I haven't thought of yet?
Everything. Everything. We use cloud computing stuff. We use Ruby. We came out of we used to build stuff in C++, then Java. We build everything in Ruby now. We can build stuff in literally a tenth the time that we used to. We can scale it almost infinitely with the cloud computing services. I can't even, if I tried to build Reverb Nation 10 years ago, one, I don't even think I could do it because of the web technologies, but it would be so prohibitively expensive. You wouldn't have been able to test your first thesis without it costing millions of dollars. So.
Yeah, I'd say the other thing is on the marketing side. Jess is a good friend of mine who started ShareFile 5 years ago. Literally started with his own programming ability, which he taught himself, and a Google AdWords account. And so he was able to quite literally spend $50, get a customer, spend another $50, get another customer, and spend 6 to 8 months just proving out the model without investing hardly any of his own net worth into that project. And so we also do the cloud computing. We use Amazon Web Services, And so we can literally have, SAS 70 Type 2 server infrastructure that is protected like Fort Knox and pay very little to do that and to, again, be able to scale as much as we want to. And we're on a perpetual release cycle with our software. It's software as a service. And then that also allows us to not go with traditional kind of enterprise sales model where we're selling licenses. I mean, we have 12,000 plus customers who pay us with a credit card every month. And so that really helps with just a cash flow, from a cash flow standpoint as well.
Yeah, so I think that the things that's made it easiest for us are things like the programmable web, where almost every site and technology, a lot of new sites and a lot of new technologies are basically saying, let us be your operating system, we'll open up an API and write to it. It allows us to really focus on creating value. So let me give you an example. Right now we do real-time yield optimization for unsold ad inventory for publishers. So 90% of that is ad serving. Rather than us building our own ad server, we just built what we have, the intelligence that we have on top of the Google Ad Manager ad server, which has an API and allows us to manage it. So essentially, we come to the market in like 6 months with a fully formed application that has a tremendous amount of value for certain publishers, and yet I've only done it with one software developer focused on the API that Google Ad Manager offers. So I think like Facebook Connect, I think the things that are happening online are enabling technologies which are online which allow you to program them so you can focus on creating value as opposed to recreating the service. So there are business services things like we were talking about before, like hosting, like you guys are talking about, the business services like outsourced email marketing, those kinds of things. But I think in terms of really creating value technology online, I think looking at existing technologies that you can program, I think is very interesting, very valuable.
Yeah, and from one of the things we're seeing that's a result of that ability to spend less in starting a company is that we're seeing a really good change in the Southeast region. We've generally, in the past, had, I would consider, a very conservative IT kind of community. The businesses have been interesting. There hasn't been a lot of kind of over-the-horizon, change the world type of things, and a lot of that is the entrepreneurs, and a lot of that is the investors and what they're willing to invest in, but the ability to do something more cost effectively and to get to market quicker, I think is getting people to think outside the box more in this region. And you're seeing people, we're starting to see people start to do that. And we always, because there's not a lot of money already in the area in terms of a lot of super angels, a lot of entrepreneurs that have done it before, those guys in the West Coast and Northeast, they can sink a whole bunch of money into something. Around here, we need the ability for people to not put a big percentage of their net worth into a company. And one of the concerns we always have as investors is we don't want an entrepreneur to have a huge part of their net worth in a company. And the reason is because it tends to breed conservative behavior. Mike and I had conversations about this a long time ago, in some of his earlier companies, right, before he became rich and famous, that he was investing in his companies, and we always used to talk about, well, let's make sure we're not kind of tying that to the strategy, and let's make sure we're thinking big, right? So it's a big plus for us as investors when we see entrepreneurs that are able to get through the early stages of a company, vet an idea, get to market, get technology developed, and not sink a whole bunch of their net worth into it, so that when we come out the other end, we can put a deal together and all feel good about being risky going forward and build a big company.
A follow-on to that, John. Are you seeing, because of the things we're talking about here and also sort of the relative lack of money, are you seeing the companies that are coming to you, the baby companies, are they much more fully developed than they were maybe a few years ago?
Absolutely. Yeah. I mean, it used to be, we'd see a lot of vaporware, we'd see a lot of, stuff on paper, right? And we would look at it and we'd listen to it, and if we're experienced people there involved, we might actually take a shot at it. But now, we're leading off every meeting with a demo, some kind of view of the product. And that changes the game completely when we can actually see it and we can call people we know and say, hey, can you look at this? Can you put your hands around it? Can you give us a sense of whether or not you think there's a market for this? The diligence is so much easier to do now on those companies. Now, the flip side is that there's hundreds of them, right? There's even more now than there were before, certainly in the internet software space. Yeah. If you look at the flow of business plans, we generally get the same amount every year, but they tend to shift in terms of where they come from. And now it's a lot of internet software companies, and we're just kind of having to sift through it. But we're also developing an infrastructure here with things like Launchbox that are giving people an opportunity to vet those ideas in a structured environment before maybe they go look for venture capital.
Do you require traction?
What's traction?
Traction. You have to have like a,
What's traction?
like, you know,
Audience and revenue and
customers,
audience.
somebody interested in your
Are you-
product.
are you-
No, I'm just
That's
kidding.
funny, that's what I'm
sorry.
always, that was a
Yeah,
hospital
that's-
term.
no,
Yeah, I like
people,
that.
people use that so often, and they use it in the investment community too, when they try to explain, if a company doesn't have any revenue, well, we have traction. I'm not really sure what that means, but we generally don't. I mean, we invest throughout the spectrum. We invest at very early stages, and but we do like to see some visibility into the business model. We want to be able to do some diligence on vetting the idea. But we've become, because it all gets back to something Mike mentioned before. The valuations right now are generally down because there's less money in the system. There's less competition amongst venture firms, right? So I can look at a software company that comes to me that's got revenue, that has traction, I guess, however you might define it, and one that doesn't have as much, and they're both the same value to me, about the same valuation, right? Because there's a floor on how we can value companies, right? There needs to be an incentive for the entrepreneur, right? We can't just price a company at $1, right, and invest in it. That doesn't make any sense for anybody. So there's a floor on our value, and if we can get the same value for a company that's further down the road, I'm going to get fired by my investors if I don't take the one that's further down the road, right? As long as I believe in both of them. So it just creates a tough environment for companies that don't have some kind of progress.
I want to change the word traction to value. Because let me tell you what I see all the time. So as we get bigger, I literally get probably 20 companies a day that want to partner with us. They have video sharing technology, or they got something. Everybody's got some little whiz bang cool widget that they want to, and invariably, I look at it and I go, how hard is that to build? Often not hard at all. What would I have to? How quickly? How much faster can I get to market? How important is it? How much faster can I get to market? And I would say 99% of the time, I come away with this. I go, if I want that, I'll just build it. And it's just not hard. So, but a company that comes to me and says, I've got a customer base, a demonstrated model, a proven support organization, API that you can integrate with. I can help you grow that aspect of your business and you don't have to worry about it. To me, that's value, and it's defensible, and it's something that gives me it makes me more likely to partner, and my guess is it makes John more likely to invest. So I think that you better have something more than just like a little slick, kind of program that you wrote against, the Facebook API or something like that. There better be real value in your business or in your product or in your customer base or something.
Okay. I think maybe we'll turn it a little bit and talk about the Southeast in particular, since we are in the Southeast. And, the entrepreneurs on the panel all are here in the Southeast and have chosen this place to try to build their companies. And so is the Southeast a good place right now to start a company? If someone was coming to you and saying, hey, I want to start a company, I want to do it right here, would you say no, go somewhere else?
I'll take that. What I would say is the odds are against you, but that doesn't mean it's not a good place. I mean, the reality is there's more money in the Northeast, there's more money in the Valley. There are more ideas and there are more people that are pitching for attention in those areas as well. I think that the challenge is some of the groups in the Northeast and on the West Coast, they don't like to invest outside their neighborhood. I don't really blame them for that. I think that's probably a good idea. And so as a result, because there are fewer places to go in the Southeast, there are fewer places where you can pitch. The other side of that is there's less competition for you if you have something of real value, and there's real opportunity for you, and there's real money being invested. So I occasionally talk to people. Occasionally people call me up and say, I got this idea and blah, 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 and I'm a single person, and should I do it here or should I do it elsewhere? And for them, I've actually told them, go to the Northeast and pitch, go to the Southeast and pitch, go to the West Coast and pitch, and be ready to move if somebody be prepared to receive a term sheet that says, if a venture firm is in San Francisco, they're going to say, we'll invest, but you'll move here within the next 3 to 6 months. Same thing for the Northeast. So if it's a well-established company, you really got to go with where you are. And it just, it's tough to get a group from the Northeast or from the West Coast to invest here, not because there's not real value here, but because they have so much value they can invest, they have so much opportunity they can invest in locally, and it's a lot easier and more comfortable for them to have some place they can just walk down the street or get on the plane and be there in an hour. Is that?
The reason we were laughing is because right before this panel, there was somebody had posted something. I guess was that TechCrunch? I don't know. And they'd said that this is the backwater of entrepreneurial investing or something like that.
Actually, I think I know that commenter.
I think that's crap. It's absolute crap. I was born up in I was born in the Northeast. I started 3 companies here. I know most of the people that are from this area. That are in this community. I think I really understand the kind of ins and outs of it. And I'll tell you, there's a few things about this place that are incredible. We have smarter people than any place else. The quality of the people, especially on the technology side, are special. I mean, it's funny. We just did this deal with this large company out on the West Coast. And one of the things they did was they came in and they did a technical due diligence on our company, and they came away and they go, "Your technical team is 10 times better than ours." When we sold our last company to DoubleClick, some of our technical team competed in a coding contest with hundreds and hundreds and hundreds of developers. And we had 4 people be part of the coding contest. They came in 1st, 3rd, 6th, and 9th out of hundreds of people. I mean, it's incredible. If I would say, we're lacking 2 things in this area. One is, I think we're not quite as aggressive as we need to be. I really feel like that we just as a community, there's this lack of sort of a cohesive community around let's do this.
We're too nice.
We're too nice. And the other is that, and this is a problem, is that a lot of the companies, this is my problem right now, is that a lot of our customers and our business development relationships aren't here. And that's, I think, probably the biggest problem, is that in order for us to do business, we have to have feet on the street in New York, LA, San Francisco, depending on what you're doing. And to do that means that you have to make a commitment to that aspect of your business, especially early on, because nobody's coming down here to see a little company.
That's right.
And I think that if you have that commitment and you understand that that's an expense and something that you need to be, the CEO needs to be ready to do, then I think you're fine here. But don't expect to sit here and build in a vacuum, because that's not where a lot of stuff is done.
Yeah, I agree with everything. I mean, we've been here a while, and we kind of go with the ups and downs in the region. But right now, when we talk to other investors around the country, there's a lot of respect for RTP. We've talked mostly about IT because that's the expertise here on the panel. But we've got a life science community here that's world renowned.
Yeah.
The RTP area is in some ways considered a better place to invest in life science technology than anywhere else in the country, including Silicon Valley and Boston. And it has been traditionally more than half of venture capital invested in the state's been in life science companies. So let's not lose that sector in the discussion. On the IT side, I think it's getting. We've always seen a move of good executives here from other areas, cost of living issues, just general cultural issues. I talk to my peers in other venture funds, and I compare kind of what are the odds out there. We see maybe 500 business plans a year and invest in 10. They see 1,000 and invest in 20. So the odds are similar. You're just talking about different numbers. And the fact is we do need more capital here to make it easier, so people don't have to fly somewhere else to get capital, right? We would much rather prefer that entrepreneurs not have to get on a plane, because in Boston, Silicon Valley, you don't have to get on a plane.
Yeah, I mean, just a couple things. Very specific. I love it down here. I'm really happy to be back down here. And but it was funny because I was listening to Vivek speak, who'll be speaking later today, and he's fantastic. And he was ragging on this area a lot. And one of the things he was saying is that there's not much going on here because you don't have the same level of interaction and social interaction and quantity of people and ideas all bouncing off each other that you have in Silicon Valley, for example. And I do think that's true. I mean, as just a couple things I've noticed, up in New York, it's really easy for me to keep everyone at the office until 7, 8, 9, 10 o'clock. Here it's hard. In New York, and I think in the Valley, once you're done with the office, you go out, and here you go home. And so those are a couple things that I've noticed just between the two cultures, that frustrate me a little bit about building a company down here. But it's very cheap down here, and yet you have all the universities, and like Mike said, just unbelievably smart people, and so you can do a lot here. And like these guys were saying too, I think the one thing you can't do is try to build a company here and not have someone, whether it's yourself or someone else, on a plane or based in New York, LA, Silicon Valley, where you can get the best of both worlds, have low cost and a lot of quality people here, but still be plugged into a lot of the other scenes. One of the things I hate about Silicon Valley and New York and some of these places too is they have a real tendency to view their little world as the world. And so, for example, we, in our competitive space, we see people raising tons of money, spending a lot of investment on iPad apps, and everyone's coming up with the next Twitter add-on or social media stuff, where here we're a lot more just, I think, in touch with the general American consumer and trends. And so, we haven't built a lot of those things because, they don't necessarily add value or revenue to our company immediately. We can stay focused on what, in our space, small business owners need, which I don't know that some of the major media markets are as in touch with.
Early on, you miss a lot of opportunity by being here.
Yeah.
A lot. And as you get bigger, you start to get on people's radar, and then it doesn't matter so much. I don't think SaaS misses a lot of deals, or Red Hat misses a lot of deals. But we used to, we don't miss them so much anymore. But I'll have, Jason, who's one of our investors from the Seminole site, he'll send me a press release, and said, hey, one of your competitors, this tiny little competitor of yours, just partnered with somebody. Well, they happen to be in the Bay. And we just, that's the thing, we just can't see everything. And that's to me, that is the single biggest downside of being here. Make everything else but in a thimble.
Okay, we're going to open up for questions in just a sec, but I have one quick question for John. If I'm an entrepreneur who has value and traction and all these great things that we need, how do I get in touch with you? Do I send you an email? Do I call you on your home phone?
Just bootstrap it. Come on.
Hold on. I got to get my pencil because I'm taking notes.
Exactly.
I'm at work till 8 or 9 p.m. every day, so
Yeah, great.
I put in the hours.
Yeah, no, I have no doubt.
Yeah, well, that's a good question. We want it to be easy for people to get in touch with us. We really do. I mean, sometimes it might feel like it's hard, but what is that?
He's recording it.
Oh, you're going to record this answer? Thanks, Mike. There's a camera there, too. So so let me give you some basic statistics. So, we do see, roughly 500 or so. I think last year we saw closer to 700 business plans. We invested in, I think, 6 of those as new investments. So the odds are low. But if you are referred into us by someone we know within our network, your odds get much better. The number of business plans we looked at that were referred in, probably about 200 last year. So and the way you get referred in is you find someone that knows us, and usually the best way to do that is through corporate counsel that's worked with us before, someone in your network, an advisor. It could be anybody. It could be Mike. It could be someone on this panel, because I know all these guys. I mean, if Mike shows me something, I don't know. But
Yeah, right. That's kind of points against.
But
Basically, give him my card.
we don't have enough resources to read 700 business plans. We just don't have enough time in the day to do that, even though I work till 9 o'clock every night. So what we do is we have to filter somehow, and we read some portion of every business plan. The ones that come in cold, the 500 that come in cold, we'll read maybe the first paragraph or the first page. If something really grabs us, we'll keep reading, but for the most part, we won't. I don't really care too much about business plans anyway. I like to talk to people, but we'll very quickly try to filter down. We're always trying to filter down, and you need to get into someone's network, because we rely on the people in our network to do some of that filtering for us, and we rely on them to know what we like to invest in, the people we like to invest in, and they do some of the filtering for us. So when they send us something, I can say, okay, this has already gone through one level of filter, and I can put it into that short stack of things to really dig into and take a look at. So you have to get referred in. But that being said, we try to respond to every single inquiry we get through the website, through the email. Certainly shouldn't call my home phone, but definitely, if you want to just call me in the office, we try to get in touch with everybody.
Thanks. Do we have any questions in the audience? We've got about 5 minutes. None?
A lot of problem in the internet space is just IP protection and trying to, as you're getting a company off the ground, how do you kind of handle that? I mean, you have to move quick. I mean, you said an idea doesn't generally last very long. just kind of getting moving quick and that kind of thing. But IP protection makes sure someone doesn't steal your idea or going to present someone and say, well, we can just create that.
So the question is, if you're trying to move quickly, should you and how should you protect your IP?
I can speak from our standpoint. We've only sought and all the time and all the software we've ever built one business process patent, and I think that was a waste of time. I think unless you have truly something that's unique to your technology, it's very challenging to, one, protect the IP and then defend it. I think your best defense is to execute really well, move very quickly, and especially now, technology is a lot less your value than your customer base, than the stickiness of your product. I think that it's so hard and so expensive, and ultimately, I think ineffective to patent a lot of the IP. We, personally speaking, we have not taken the route of pursuing patent protection. That's not to say it's not a good thing for some people, but for us, it has not been.
Yeah, the thing I would say about that is it depends. I think it depends on your perspective of why you're doing it. If you're doing it to protect yourself and create some sort of advantage when you're going out and competing, I think I agree with Mike. I think its benefit is minimal. I think if there's a reason to do it, to build an asset in the business to help you raise money, to help you exit, to help you possibly even generate revenue, that may be a good reason to do it. But I think if you're thinking of that as, well, I'm going to get everybody to sign NDAs and I'm going to protect the technology and then I'm going to launch and that's going to help make my path clear, I just don't think that's realistic. So I think there is some value, and there are businesses that I'm familiar with who've patented their technology, done some IP protection, and they've done it because it's helped them raise money, because it provides some defensive assets that they can use later on. Especially because if you're going to be acquired by a big company, they may be very interested in that because they may have the money and the wherewithal to defend that patent if it really has value.
We place very little value in IP around a software company when we're looking at the investment. In fact, a lot of times companies will say, well, we want to present things to you, but we don't want to present this piece because this is what we're trying to patent. And I say, fine, don't show it to me, because I don't really care that much anyway. And I might look at it later when we're doing. We might look at the code and look at the development process to make sure you're running the development process correctly. But for life science companies, yes, huge part of it. Materials company, yes, huge part of it. For a software company, we generally don't put a lot of stock in it. It's all about your business model, how you stay ahead of the competition, and how you create switching costs once you do get a customer base and make it hard for them to move away.
Yeah, I mean, I was up in New York and I was at some kind of event and I was really excited about what we were doing, and I got talking to somebody who I later found out was in the investment community, and I told him a bunch about our business, and then all of a sudden I was up all night in a panic that maybe I'd given away all our secrets, and so I told Howard, our CEO, about it just to confess. He's like, who gives a shit? You can't, you protect your IP with execution, sales, and marketing.
Did you have an initial vision for it, and is it what it is right now?
Absolutely.
It's been a straight line. If it's not, what were the points where you realized you needed to take it a new way, and anybody else?
Truthfully, we really did have. We had a thesis that if we could develop relationships with the artist community, with the artists, and we could control the way they communicated with their fans, that we could sell them services and we could monetize it that way, but we'd also be able to create new products that we could sell to those who want to tap into an aggregated group as opposed to an individual group. So for example, sponsoring one small band was ineffective for a brand, but sponsoring 1,000 at a time would be very effective. So that kind of idea. So that stayed the same. I think we change every day. I mean, we're constantly evolving, and especially with Facebook. Facebook has really changed the way we think about what we do. So I think for us, we haven't had a lot of big changes in sort of our business. We have emphasized some things over others. For example, we were going to do a big brand product, and a product that we would sell to to big corporate brands, and we had some success selling these. But what we realized that if we tried to scale that business, it was going to require so much work that's more project management and sort of advertising agency like, that it was going to defocus us from a lot of the things we were doing, and as a result we de-emphasized that piece of the business in favor of some other ones that were more scalable. So but we always are doing this, and I'll tell you, I have, and John was bit through with one of them. I have, every business that I've been in has gotten to a point where there were some really hard decisions that we had to make, usually involve cutting staff and cutting costs, and it's going to happen. And I think the way you deal with that, I think that I saw the keynote, and I think that was one of the most interesting things that I heard him say, is that you really are going to, your success or failure is going to be defined by that moment. How do you handle it? So I think that's your question. I mean, how do you evaluate where you are, and how do you evaluate change? And I think it's key. And I think having that intellectual honesty about where you are is paramount to anybody's success. I'm sure these guys have comments on it too. Or not.
Yeah, I mean, I could talk about it briefly, right? One of the things that struck me was a Wall Street Journal article years and years and years ago when someone was thinking about starting a business, and the guy he was talking to said, well, you need to understand every small business dies 1,000 deaths. And so are you going to be prepared to dig back out of the ashes and try and build it for the 1,001st time? And one of the things that I think is so interesting about ShareFile and my friend Jess is that he's so brilliant, and most entrepreneurs are seen as major risk takers and everything else. Jess is not a huge risk taker. He was able to through building a services company first, start to see some needs in the marketplace, which I think his point about that is a great thing for entrepreneurs. Is if you start with a services company, you can immediately bring some cash flow in without a lot of overhead, and then you can start to really see what your potential customers are running into as needs, right? And so he was able to do that, see some needs, and then just on his own, write a program that he thought he could build to solve those needs, and literally has grown everything organically based on recurring revenue and metrics that he's been able to pull from his initial customers. And so ShareFile has had a very, very steady success, but it's just one example. He saw what we were doing in New York, building an outbound sales team, so tried to build that, and that failed for 18 months. And we've just now gotten our outbound sales efforts working over the last few months, and so there's constantly going to be times to reinvent yourself or take risks. I think one of the hardest things for me has been when you start to build a team and have other people's money and people working for you, is just the emotional difficulty of, like you said, maybe having to go through a layoff or having to dramatically change someone's job description and make moves that are in the best interest of the overall health of the business, that are going to have really potentially negative effects on some of the people that work for you that you really care for. And that's a really, really hard, just emotional, if you care about people. Maybe you don't, so it's no big deal. But for me, that's been a really big, interesting challenge.
I think we need to wrap it up, actually, guys. Thanks to the panel, and thanks for coming.
Produced by Duke University. Online at duke.edu.